Good evening. Thank you for joining us tonight. I'm Todd Kuntz. Our top story, mortgage rates, again, on the rise. I'm joined right now by Sean Finch. He is a vice president of Interwest Mortgage in Idaho Falls, also a loan originator. Mortgage rates, as I see here, have climbed to a 23-year high.
Correct.
And some are saying, I saw this today, some are saying an 8% rate is not unlikely. What are you seeing and what is behind this?
So we have seen an increase in interest rates. Right now, today with good credit and at least 3% down, you could get an interest rate of 7.625%. So we are a little bit below the national average in this area, which is lucky for home buyers right now. What's causing it is just the fear in the bond market of interest rates possibly staying higher for longer or possibly going up even more. And so we have a sell-off right now in the bond market.
Okay, let's look at we've listed some of the other factors here that might be behind this. We know, like you say there, inflation is high, other factors. Here are a list of some of those. Your credit and finances, of course, that'll always play a factor. You got bad credit, you're going to have a higher rate.
Correct.
Your amount that you're borrowing, on par. Loan structure, what is that?
So the loan structure is the type of loan that you're doing. Right now, for a first-time home buyer, they can get an interest rate as low as 7.125. That did also take a jump this week higher, so a first-time home buyer can get a lower rate. If somebody is borrowing under $250,000 on a conventional loan right now, they can get a lower interest rate. And also, if you have 25% down or more when you're looking at buying a home, you can also get a lower interest rate.
The second page of that, I think, has that as a first-time home buyer on there. You could see that as one of the factors. Let's continue our factors list. Go ahead, pop that up. Location of the property. There's first-time home buyer, and of course the current landscape of the economy and whichever lender you go with.
Correct. And we tell everybody right now, especially when it comes to the lender side, shop around. Make sure you're getting the very best interest rate. But the key when you're shopping around for those interest rates is also getting the closing costs. You could get it quoted at a really low rate today, but then find out your closing costs are going to be extremely high. The lender's charging you a buy down. So we're telling people, make sure you shop for both the fees and the interest rate to make sure you're getting the very best deal.
Get the best deal. Let's put up that third page. That talks about how to get the best deal, some of the things to look for, some of the other factors that are out there right now to help us. Determine the right mortgage for you, which fits your situation, your
Correct.
property, where it's located. You just talked about that. Compare all the rates that are available, and then choose the best one for you. Okay.
If somebody can do their homework right now, there are some deals that can be still had out there, and rural development still offers some really good interest rates. FHA has some really good interest rates still. So there's still some opportunities out there for home buyers.
And without digging into the weeds and the trenches here, oftentimes you hear compared 30-year and 15-year. Right now, the 15 years no better.
They're really not. You can see a little bit of a difference. Usually it's about a half a point or more, but because we have an inverted yield curve right now, you're just not seeing that difference right now. It's difficult for people that want those shorter terms to get a lot lower interest rate right now.
Do you want to hedge with what the job data is going to say tomorrow? And that's going to, because everyone's waiting to see what tomorrow brings, and that it determines what the Fed will do.
Correct. So if that unemployment report shows that more jobs were created than expected, or the unemployment report ticks lower, that kind of tells us that the Fed's going to have to raise rates some more to try and cool down the market, and that will raise interest rates.
That's a possibility. At the least, they say they'll keep them where they're at for longer.
Correct. And that was the big shock. One of the reasons why these rates jumped up so much over the last 10 days when the Fed came out and said, we are not going to be cutting rates till the third or fourth quarter of 2024.
Next year.
And a lot of people were hoping the first quarter of next year.
Okay.
And so that took a little panic into the bond market, created.
Thanks for stopping by today and explaining this to us, taking your time.
You betcha, anytime.
That's great. Sean Finch, Interwest Mortgage. Thanks a lot.
Thank you.